CNBC TV 18, embarking on a quarter century of excellence.
The Dow Jones and S&P 500 snap a three-day losing streak ahead of the November jobs report. The Nasdaq is on track to post its sixth straight week of gains. Stocks in the Asia-Pacific trade largely higher. The GIFT Nifty is indicating a positive start for the Indian market. Crude corrects for the sixth straight day. Brent falls to around $74 a barrel as production in the United States rises and concerns persist over the health of the Chinese economy. Prices, however, partially recover this morning. The RBI's Monetary Policy Committee will announce its rate decision later today. The CNBC TV 18 Citizens MPC expects no change in rates and largely no change in stance, but growth projections are expected to be revised higher. Over 1,000 crore block deals likely in Zomato today. SoftBank Vision Fund may sell up to 1.1% stake, while Matrix Partners is likely to sell nearly 9% stake in Five-Star Business. Titagarhi launches a QIP to raise 700 crore rupees and to fund working capital needs and repay debt. And Akasa Air plans to go international in the first half of 2024 with flights to Qatar, Kuwait and Saudi to begin with. Founder and CEO Vinay Dubey says a triple-digit aircraft order will be announced in January. He also adds that the Rakesh Jhunjhunwala family has no plans to sell their stake in the airline. Good morning and welcome to Power Breakfast. I'm Pavitra. Those are all of the top headlines that we have for you this morning. There's a lot to talk about, and the handover from the US has been quite positive. On the back of that, you have most of the Asian markets which are trading in the green. So everything actually barring the Nikkei index is in the green right now. The Taiwan and Hong Kong markets will come up for you, and it's looking quite good. Things are off to a good start. So the Taiwanese markets up around 160 points. You have Hang Seng, which is trading with a gain of just around 22 points right now. By the way, for the week, you have seen pretty significant cuts come through in the Nikkei markets, in the Shanghai markets, and in the Hang Seng markets as well. So today, Hong Kong is holding up, but for the week, it's been an over 2% kind of cut for now that you're seeing in Hong Kong. The Nikkei markets today are down around 540 points. It's down 3.5% for the week so far. But today, you also have Straits, Kospi, Shanghai, all seeing just a minor bit of green. So it's definitely more positive than negative coming through from Asia this morning. The GIFT Nifty will be up for you. It indicates that the start for our own markets will be in the green. We're around 45 points higher on the GIFT Nifty right now. Moving on, let's also talk about the US because we saw a positive session there after 3 days. So the Dow gained around 63 points. You had the S&P 500, which was up 36. And actually, both the Dow and the S&P 500 snapped a 3-day losing streak. So that's positive coming through. And the Nasdaq, like you can see, was the big outperformer of the day. It saw gains of almost 200 points. Now, the reason I saw this kind of move coming through on the Nasdaq is because Google parent Alphabet surged 5% following the company's launch of its Gemini artificial intelligence model. Meanwhile, you also have shares of ADM which surged over 9%, marking the stock's best day that we've seen since May and highest close since June as well. This after the company launched a new AI chip that will compete against NVIDIA to power AI applications. It was all of this tech-related news that really led to that big jump that we saw on the Nasdaq index. I just want to mention that there are some important macros to track as well from the US. The November jobs print is due later today, and that is, of course, an important cue for global markets that we will be looking out for. Like I mentioned, the investors will also be, looking at the Fed's policy decision, which is due next week. So let's listen in to former Fed Vice Chairman Richard Clarida on what he really expects from the central bank.
Disinflation progress really has been remarkable in the last 24 months. And so the amount of heavy lifting the Fed needs to do from here on is certainly not all that much, we would think. In fact, we think the Fed thinks that they're done. There is a risk that they may need to do more. The Fed has indicated, and we think that Chair Powell will repeat this on next Wednesday, is they can start to think about cutting rates even before inflation gets to 2 if they're convinced that the progress is real. We do believe that the 5 cuts that are priced in for next year look aggressive to us. That could happen in September, for what it's worth. The last time the Fed did its projections, it had 2 cuts next year. And something in that 2 to 3 range probably as a baseline makes more sense than 5. In terms of sitting in the room, yes, I had that privilege for nearly 4 years. The Fed is looking at a large body and range of data, but at the high level, they're going to want to be convinced that, inflation is less than 3% and on its way to 2%, and they'll be looking at not only the price numbers, but also the wage inflation data as well. But as inflation does continue to fall, they'll entertain rate cuts starting next year.
All right, that is an important word coming in, and that's everything that we're looking at globally. But let's now talk about the cues that you should track from a domestic standpoint, as well as some of the stocks also that could be in focus in today's trading session. We have Vivek, Hormaz, and Mangalam all here to prep us up for this session. Guys, a very good morning to all of you. Vivek, we were just going through the global handover, and that's definitely positive.
Absolutely right. Good morning. So, all set to end the week on a positive note, at least if you're looking at the global handover that you just mentioned. Along with that, crude oil prices yesterday too slipped for the 6th straight session. Brent futures now hovering near the $74 a barrel mark. But coming to the Indian markets yesterday, very small dip. The Nifty and the Sensex managed to cool off after a 7-day gaining streak. It was a record-breaking rally. But when you're talking about the broader end of the markets, especially the mid-cap index, it continues the record streak up, hitting the record highs for the 15th straight session in a row. Now, along with that, yesterday the key mover was the PSU power index and even the private power stocks. So when you're talking about the entire power pack, especially names like Tata Power, the entire pack was up. Strong demand is something a lot of companies have been alluding to, and that led to the rally over there. On the other hand, sugar stocks were the top laggards. All of the sugar stocks lost significant ground in yesterday's trading session on the back of the shift in the policy. And today, you could see some follow-on action, especially as far as the sugar stocks are concerned. What are the key events today? Of course, we've alluded to the RBI MPC meet. Along with that, in the second half, the AMFI monthly data will also be out. So the SIP numbers there will be important to focus on. Like you mentioned, Asian markets, indicating a gap up. GIFT Nifty indicating a very flat start for our own markets today.
Okay, Vivek, thanks a lot for getting us all of those details. Let's also talk about the stocks now. Hormaz, take us through the list.
Well, as Vivek just highlighted, the sugar stocks will be in focus today. But aside of that, we have Titagarh Rail that has launched a 700 crore QIP. And the floor price is almost at par with Thursday's closing price. And it intends to utilize those funds to repay debt, fund its working capital needs, and for general corporate purposes. Some block deals that are anticipated today. Zomato, where the SoftBank Vision Fund is likely to sell a 1.1% stake worth over 1,200 crore rupees. And the floor price is a 1.2% discount to Thursday's closing price. Now, Five-Star Business Finance, where Matrix Partners also plans to sell up to 8.8% stake. The base size is 5.9% with an option to upsize as well. And the issue price is 730 rupees a share. The IRCON non-retail OFS received a healthy demand, 4.63 times compared to the shares on offer. And the government has decided to exercise the green shoe option, and the OFS for retail investors will be opening today. Olectra Green Tech, it has received an LOA worth 62.8 crore rupees from the Vasai Virar City Municipal Corporation for the supply and maintenance of 40 electric buses. So we'll keep that on our radar. And lastly, DCB Bank, where there is a board meet today to mull up to 10 million fund infusion from the founders. SpiceJet also has a board meeting today to consider its September quarter earnings. And Jindal SAW, which will consider a QIP issue on the 14th of December. Back to you.
Okay, Hormaz, thanks a lot for briefing us on all of these stocks. We will watch for these in today's session. Finally, it's over to Mangalam for the futures and options space. Mangalam, one last session before the week is out.
One last session before the week is out. But yesterday, it was the Nifty weekly options expiry, and as a result of which the Nifty closed at around that 20,900 mark. All the option action was gravitated towards that region itself, because we did see a fair amount of straddle writing there. Option writers were positioned around 30 points on either side of 20,900 too. The other indices, however, the Nifty Bank recovered from the lows, ended mildly in the green. We had the Nifty Midcap Index doing extremely well as well, telling you that the underlying trend still remains extremely bullish. And the FIs, while they sold in the cash market, that could have been on account of a couple of large trades. The DIIs also sold about 10 odd crores. The important part is they bought in index futures worth around 600 odd crores, and the longs have inched higher from 55% to 56.5%. And that's not all. I've been talking about how the FIs have increased their purchase in Nifty Bank. Right now, on a day where they overall purchased around 597 crores in index futures, they bought around 601 crores in Nifty Bank futures, telling you that they are more bullish on the Nifty Bank than any other index right now. And rightly so, given it is the RBI policy meet right now. Nifty Bank has underperformed in the past, and a no change has been priced in. Any dovish commentary coming in, or any impact in their commentary which does not affect the market, would mean the Nifty bank would rally further as well. What are the levels we're looking at on the Nifty? For the next week, 21,000 call has been extremely active with a premium of 100 rupees, telling you 21,100 would be a bit of a resistance. But at the lower level, yesterday's low, which is closer to 20,800, would be a firm support, and that's where the put writing action is as well. In terms of stocks, Vivek did speak about power stocks, so Tata Power and IEX, both of them saw a lot of long positions being added. But Balrampur Chini, the sugar stocks have been adversely affected. We did point out the possibility of it entering F&O ban yesterday, and it has indeed entered F&O ban.
Okay, Mangalam, thanks a lot for running us through all of those cues. That is the trade setup this morning. But with that, it is time for a short break. Like we've been telling you, the big cue today is that RBI Governor Shaktikanta Das will announce the MPC decision at 10 a.m. today. So we're going to line up all of the expectations for you when we come back.
CNBC TV 18, embarking on a quarter century of excellence. CNBC TV 18, embarking on a quarter century of excellence.
Welcome back. You're still tuned into Power Breakfast. Now, the key cue today is that RBI Governor Shaktikanta Das will announce the RBI MPC decision at 10 a.m. And a CNBC TV 18 poll expects the Reserve Bank to keep rates unchanged today. We have Ritu Singh who's standing by with all of the key findings of this poll. Ritu.
This time around, it is not the rates or the stance that the markets are going to be watching out for, because that's a near given in the current scenario. Rather, markets are on tenterhooks to see if the governor is going to make any other explosive announcements like raising risk weights or open market bond sales. Now, all of the respondents to CNBC TV 18's poll expect no change in the repo rate this time around. That is a status quo policy for the fifth consecutive time because of the stronger than expected growth numbers and the continuing inflation uncertainty. In fact, the respondents to our poll have ruled out any further rate hikes in this fiscal year. And as for the first rate cut, while 20% are expecting it by the first quarter of next fiscal, a larger majority of almost 70% expects it only in the second half of FY25. No change is expected in the stance, which is going to be retained at withdrawal of accommodation. Not even an indication of a possible change in stance just yet, because many believe it will be tough to find a consensus among MPC members to shift to neutral just yet. Now, the inflation forecast for FY24 at 5.4% is widely expected to be left unchanged, with just 10% expecting a slight revision upwards. On the GDP numbers, a large majority is expecting RBI to up the 6.5% forecast for the year to between 6.6 to 6.9% on the back of a stronger than expected show in the second quarter. Now, the governor himself is expected to sound more hawkish than dovish in his statement, because we're not really out of the woods just yet when it comes to inflation, and risks do remain. Now, on liquidity related measures, some are expecting clarity on the OMO bond sales, which was announced. They will also watch out for any changes in the standing deposit facility mechanism to tighten policy without actually tweaking rates, and some others are looking for more short-term liquidity-related announcements that the governor could make. Now, as for other prudential measures, the general expectation is RBI could tweak prudential norms where it senses excesses like it did for unsecured loans. Perhaps there will be more standardization of risk weights. The governor also earlier warned about usurious lending rates from certain microfinance lenders, and so the markets will watch for any regulatory action on that front. But all of these may not necessarily happen in this policy itself.
All right, Ritu, thanks a lot. Those are all the highlights from the poll. In fact, CNBC TV 18 Citizens Monetary Policy Committee also expects the central bank to maintain status quo on interest rates. They also expect the RBI to sound hawkish, but the panel was quite divided when we asked them about the growth forecast. So listen in to what they had to say.
The first question is, what will the Reserve Bank and the MPC do to interest rates on December 8th? So,
no change.
No change. Pause. Shaumya? Shaumya?
I think it will pause.
Okay. Sajid? Pause. Okay, I think you're on mute. I could lip read you.
Pause, yeah.
Sonal?
Pause.
Okay. Dr. Sen?
Pause.
Okay, this is an easy one. Withdrawal of accommodation is the stance. Will that be retained, Shamiran?
I think at least for this policy.
Okay. Soumya, what do you expect?
It will continue to retain withdrawal and accommodation given the current inflation objective.
Okay, same as Shamiran. Sajid?
Retain it.
Okay,
Retain the same chance.
Sonal?
Retain.
Oh, Dr. Sen?
I would move to neutral.
Yes, sir. You have held that view. I don't know how the Reserve Bank is going to manage that transition, though, as and when they do. Well, a quick third question. Will Reserve Bank change the growth forecast from the current 6.5? If yes, to what? Shaumya, you say that first.
I think the Reserve Bank is likely to revise it upwards to around 6.8% or so.
Okay. Oh, 6.8. Yours?
Maybe around 6.7.
Okay. Sonal?
Raise to 6.7.
Okay. Sajid?
Raise to 6.7.
Dr. Sen?
Retain 6.5.
All right, those are the key expectations ahead of the RBI monetary policy decision at 10 a.m. today. Remember, you can, of course, catch all of that action right here. But for now, we're going to get into a short break. On the other side, we're tracking all of the cues from the commodity markets. Stay tuned. We'll be right back.
CNBC TV 18, embarking on a quarter century of excellence. CNBC TV 18, embarking on a quarter century of excellence.
Welcome back. You're still tuned into Power Breakfast. Let's get a check on how things are looking in the commodity space now. We have Manisha joining us. Manisha, take us through the action that we've seen overnight.
Pavitra, thank you for that. Well, I'll start with the Brent crude prices, which are holding around that 5 to 6 month lows. For this week itself, we've seen a 6% decline, and it's headed for a weekly decline for the overall crude as a sector itself. Well, there are concerns about Chinese demand, because when you look at the month of November, the imports have declined by 9% on an year-on-year basis. Same is the case for India. We hit a 4-month highs in sense of demand for the month of October. But for November, the Indian consumption for fuel and crude also has seen a decline. That's weighing on. The markets also are looking at global surplus and the demand not picking up from Eurozone or from US for that matter, because the gasoline prices also are trading at a 1-year lows. Russia and Saudi Arabia have called out for their OPEC members to join in case of output cuts, but we haven't seen the end of it yet. So some pressure may continue in case of crude prices going forward. Some strength, though, is seen in case of gold, and this is ahead of the U.S. Non-farm payroll data that comes in today, and also expectations, a 60% chance now that U.S. Fed will cut interest rates in the month of March, and there are similar expectations coming in from the European Central Bank as well. So that is keeping gold in good favor.
Okay, Manisha, thanks a lot for filling us in with all of that action that we're seeing in the commodities basket. With that, we're going to wind down in this edition of Power Breakfast. Thanks for tuning in. We have Bazaar Morning Call up in 2.
CNBC TV 18, embarking on a quarter century of excellence.